Hi, welcome. We're so excited to have you join us today for our co-brand studio powered by Edelman Financial Engine. We have such an exciting conversation for you today where we're going to dive deep into today's current and complex economic conditions and help you understand what you can do as a business leader to retain and recruit top tier talent. We want today's conversation to be very interactive. So please use the side chat bar to type your questions, and I'll get to them throughout the conversation. We're really lucky to be joined by Edelman's Vice President of Financial Research, Dr. Wei-Yin. He's going to help us take a deep dive into what's happening in today's economic conditions and how you, as business leaders, can be analyzing them to plan not only to close out 2022 in a strong way, but hit the ground running as effectively as you can in 2023. Wei, good afternoon and welcome. How are you?
The conversation with the economists. So I'm really happy to be with you and share some thoughts.
Yes. And again, thank you so much for being here. Our audience is filled with small business leaders and drivers and growers. And so our hope as we start the conversation today is if you could help us just unpack a bit. We are reading in the news about high inflation, high interest rates, but on the other hand, we're hearing low employment numbers, and then we're hearing companies are laying off workers. So if you could start at a high level, please, how should we be thinking about today's economy?
Right. So I'm sure all the business owners are seeing different aspects of this played out in their daily business conditions. But at a high level, we're really seeing an economy that's in a transition phase. So we've enjoyed very robust growth over the last couple of years coming out of the pandemic. And that created some excess demand, which led to higher prices and inflation. And the war in Ukraine certainly didn't help that. And so we've had high energy prices fueling that inflation even more. And so what we're seeing now is the Fed, in order to try to tame that inflation, it's using one of the very few things it can do, which is to raise interest rates. And the hope is to cool the economy, hopefully without sending it into an outright recession. It's a delicate balance to do that. The Fed is looking at monthly signals, probably even weekly signals of employment rates, job growth, as well as inflation and supply chain issues in order to make its assessment of how quickly it should raise interest rates and when it should stop. It is going to be inherently a guessing game as to how to do that. And so we don't really know how well the economy is going to shape up. So we're already seeing some cooling off, especially in the housing sector, because of interest rates rising so fast. This is one of the fastest rates that the Fed has raised interest rates in history. And we are seeing, as you said, some companies, especially in the tech sector, laying off workers. We're not seeing that yet in the broader economy. So we're in a phase where there's a lot of uncertainty about how the economy will develop.
Thank you, Wei. One of the questions we get from business leaders is there a playbook they can fall back on? Meaning, is what's happening now something that's happened in the past? And are there things that we can learn? Or are we truly in unprecedented times as we're trying to navigate the future here?
Mm-hmm. Yeah, I think every business cycle is a little bit different, but there are things we can learn from the past. And I think I'm going to maybe go counter to some expectations here. I'm not going to load you up with stats to tell you in this kind of environment, you should load up on this kind of stock or avoid a certain other kind of investment. You can look at historical trends and look at what investments have done poorly or well in recessionary environments or in inflationary environments. But the thing is that every time is a little bit different. And even if you look at every bear market, so we're obviously in a bear market in stocks right now. But we've also seen an unprecedented decline in bond prices this year. And in fact, by most measures, this year is so far the worst year on record for bonds in the US. So we're in unprecedented territory in that regard, that both stocks and bonds have fallen by double-digit figures. So it's in this kind of environment, it's very tempting for all of us human beings as investors to figure out what investments we should hold and how we should be different than what we were holding a year ago or 2 years ago. However, I want to stress how time and time again, actually, the statistics tell us that we should not try to time the markets. And let me just give you a couple of examples of why. So if you look at, so the S&P has done a study on a regular basis of active managers. And if you look at over the last 10 years, for example, if you look at active large cap managers who invest in the same stocks as the S&P 500 index, 90% of those active large cap managers have not beaten the S&P 500 index over the last 10 years. So it is very hard, even for professional, highly paid investors whose job it is to watch the markets and look at all this data. It's very hard for them to beat the market. So why should we as individual investors expect to do any better than that? Now, why is it so hard? Here's a way of understanding why it's hard to time the market. So if you look at the period 2007 to 2021, so before the great financial crisis to through last year, the S&P 500 index returned an annualized return of 8.4%. And if you as an investor had been invested in that index from beginning to end of that period for the whole period, that consisted of 3,775 trading days. Now, it turns out that if you had tried to get in or out of the market, and if you missed just the best 18 trading days during that during that decade and a half, 18 days out of more than 3,000 trading days, your return would have fallen to just 0%. So just a few days can explain a lot of the return of even a diversified index. So just missing a few days, and those 18 days, some of those 18 days were during the depths of the recession or the financial crisis. So when things look the bleakest, the daily returns can actually be quite significant. So it's quite detrimental to be out of the market even for a short period of time.
So what I'm hearing from you, Wei, then is consistency. Consistency is essentially a key theme that our business leaders and our individuals should think about when investing. Do you have like a top three list? So besides consistency, what are top three things that you would advise viewers today as they think about the future of investing on behalf of themselves and a business they run?
Yeah, so I might break the top three, but diversify is certainly a key part of it. So not just holding stocks, but holding a broad portfolio of bonds and stocks, and not just treasury bonds, but treasuries, corporates, and mortgages in stocks, large, mid, and small cap, as well as international stocks. But then beyond just the investing piece, beyond just picking the investment allocation, you need to make sure that you're rebalancing the portfolio on a frequent basis, on a regular basis, to keep the risk controlled to something that you're comfortable with. You also need to, if you're saving for retirement, for example, if you're talking to your workers about saving for retirement, then, we advise continuing to save, building up an emergency fund if you haven't already done so, and reducing high interest debt like credit card debt, especially as interest rates are rising so fast. And if you have some savings in a taxable account, this year is a great opportunity for many people to do some tax loss harvesting. It's not right for everyone, so you want to talk to a qualified professional before you do that.
Great. Thank you, Wei, for that overview. We're also getting questions. We're going into a unique season. If you take the snapshot of just the holiday season, for a lot of businesses, it's their most busy time. Is there anything historically when it comes to the holiday season and the start of the new year that might be some themes that folks want to look out for just as we approach the new year and the holiday season?
Well, I think I wouldn't try to tell a business owner who's been through many holiday seasons what to do. They know their businesses better than I do. But this season is fraught with uncertainty. Consumer sentiment is at a low point, and so the ability for consumers to spend this holiday season is going to be uncertain. I think debt balances aren't so high that they will be unable to spend. But at the same time, there is a lot of uncertainty. And as the job market becomes more uncertain, then people may be nervous about spending the way that they used to in the past. Now, the job market overall in the U.S. is still pretty healthy. Unemployment on the whole is still very low. But in certain sectors like tech, in housing, people are already feeling more of that pain. So depending on what sector you're in and what part of the country you're in, those factors may play more of a role.
Really helpful, Wei. Thank you for breaking that down. And the last question, and then we'll transition to our panel, is for someone that's new to this, it's the first time they're thinking about investing. There's a lot of options. There's a lot of complexity. You can, find 1,000 different articles each day that just talks about the environment that we're in. Where should one start just to get a safe early entry into, understanding, viewing, tracking the market? What would you advise an introductory investor?
Yeah, you're right, Todd. There is a ton of news and opinions out there. I think that before I anoint any source, I think I would say that resist the temptation to read the news and take action on it. And the perspective here is, I gave you some of those stats about how hard it is to time the market successfully. But I think there's another perspective, and it comes from a fundamental fact of what financial markets do, which is that they're comprised of buyers and sellers in bonds, stocks, commodities, all sorts of assets. All those buyers and sellers are forward-looking people. What they're doing is they're looking at all of the information that's available today, and they're forming expectations about what's going to happen, about what the Fed is going to do, about how employment is going to shape up. Is inflation going to cool off? Is the economy going to go into a recession or not? Not everyone's going to be right, but the tension between optimism and pessimism is what drives the prices of bonds and stocks every hour of every trading day. And we as investors, as individual investors, are going to have a hard time outguessing that market wisdom. So, in order to beat the markets systematically, you really have to have, you really have to get the newspaper a day before everyone else. Because if everyone else is seeing the news at the same time and making their, adjusting their market prices, it's just too late to wait till the end of the day to make your investment decisions to try to outguess the markets. So I think it's healthy to read the economy, the economic news, and understand where we're headed, but don't try to use that to make big adjustments to your investment portfolio, because that's going to be a losing battle.
Got it. Wei, thank you so much for all of that overview and those insights. We're going to have you now join our two panelists to take what we've learned now and integrate that into how we can think about retaining and recruiting top talent. Hi, joining us today, we have Jim Marx, the Director of Retirement Plan Division at Edelman. And we have Alissa Henriksen, who runs her own search and strategy firm called Gray Search and Strategy. Jim, Alissa, thanks for joining me and Wei. How are you both?
Fantastic. Great to be here.
Yes, great. Thank you.
Well, let's go ahead and jump right in. We know you've been listening on the back end of the conversation that Wei and I have been having. So let's keep that in mind as we advise our audience now to think about, looking deep within their business. One of the key assets that they need for success are their employees. So whether that's retaining existing employees or going out and recruiting new employees. So Alissa, we'll start with you. What are some general tips that our business leaders can think about as they're looking to retain and recruit employees?
Yeah, that's a good question. And I know it's one that a lot of our clients are thinking about a lot right now. First and foremost, you can't forget about the importance of your culture. That's a huge benefit. I don't think a lot of employers think about the fact that the culture is a benefit. It's your environment. It's what gets people excited to come and work for you. And the more that you are talking about that culture and you're putting it out there, people want to feel that connection to what it is you're doing and even the impact, the greater good. And so that's one big piece. I would say the other are some of these components that maybe we don't think about. For example, it's interesting as we connect with candidates, what are some things that they're looking for, or the candidates that have been hired by our clients, they're talking about, we've really enjoyed flexibility, which is a big hot topic right now. And how do we as a business sustain that flexibility and give that peace of mind to people? There's also paid time off. That's been a really big thing. Pet insurance, which I'm happy to get into, that's been a hot thing. As a lot of people went out and bought fur babies over the pandemic, they want, when our clients are talking about, hey, we're going to help take care of that and bring in pet insurance, that's a big topic, along with, I would say, wellness, looking at their well-being, looking at how they can support them, so on and so forth, and getting more connected to their personal goals. So I could keep going. There's a lot of different things that small businesses are considering or should consider as we're talking about attracting talent and also retaining them, because you have to think about, it's not you, it's all your competition out there and what they're doing. And we can't always, as a small business, be providing the best benefits from a health side.
Alissa, very helpful overview. And if we can, Jim, I'd like to dive into one of the specific benefits that Alissa was mentioning, and that's as we think about the financial benefits, financial retirement benefits that businesses can be offering to their employees. So where would you start in terms of how you advise small businesses to think about financial specific benefits for their employees?
Yeah, I mean, I would say exactly what Alissa said is first and foremost is, I think as a small business owner, or small to mid-sized business owner, you have the ability to really get to know your employees. And oftentimes it's really looking at what kind of motivates them, right? And what makes them more successful at the workplace. So I know there was a study from Willis Towers Watson. It said nearly half of employees, almost 44% want retirement benefits, even more than a bigger paycheck. And, interesting enough, I'd done some traveling over the last couple of months. One happened to be, I was traveling in the Southeast, and it was a regional convenience store chain, which, could have been franchisee as well. It was really interesting. There was a sign as I was driving by, kind of like the A-frame signs, and it was on the sidewalk. And one of the things that really struck me was it was touting the retirement plan. It said, we're hiring, we have great benefits package, we have a match up to 6%. They were offering profit sharing. There's also something about the pay as well. So I thought that was super, super interesting to see that from even kind of a mid-size or smaller franchise type company. That's what we were dealing with, right? And as a matter of fact, I was also traveling up in the Northeast, and I saw or potentially another franchise. It's more of a gas station, which a lot of these are franchised as well. And they were leading. One of the things, it was a banner up there leading with a Safe Harbor 401k plan. Now I can tell you that being in this business, most people don't know what a safe harbor even means, right? So it was really interesting to see that. And, I think that leading with these benefits, certainly during the Great Resignation, I think a lot of employees, they had a lot of introspection. And one of the things that came out of it, as Alissa mentioned, some of these employee assistance programs, right? Mental health, right? Financial, right? A good retirement package, matching, things like that. that can help them be more productive at work. And then I would also say it's probably more along the lines as well that a lot of folks are looking for, employees are looking for, what's going to motivate them and what has them take action, right, to be really resourceful at where they are at their company or workplace.
Got it. And Jim and Wei, as you know, Edelman Financial Engine has millions of clients. How would you talk to our viewers about what they should be looking for as they think about that client advisor relationship and the benefits that having an advisor provides to them, especially if they don't currently have one, because they will be solicited from a number of different areas and opportunities, and we just want to make sure that we're coaching them to look out for the best components as they're starting this journey, please.
I think. Go ahead.
Go ahead, Wei.
Yeah.
I was just going to say that.
Keep going, Jim. The mic is yours, Jim.
Oh, okay, great. Yeah, I was just going to say something that more recently I met with a client of ours. They're a financial service. Probably half of them are compensated, and to the employees. And that's something that typically we do here at Edelman Financial Engines, because we do know that a lot of people have questions about their, whether it's their, or if it's other financial, happenings in their life. We are retirement planners across the country that we can refer employees to if they have questions about, financial advice or real estate, whatever it is, anything with a dollar sign in front of it. But, it was interesting to hear some of the questions with some of the folks that I was meeting, this client. And, it's really about some of the things that Wei about, right? It was about, well, should I go to cash, or, what should we do with regard to loans, or should I take a loan, or there's even folks there that were talking like minimum distributions, and they weren't a 5%, didn't have to take these. So there are some of the things that I constantly hear when I'm out talking to clients or prospects, that their employees really need the help, and that they're, and again, in order for them to be impactful at work, 3/4 of employees out there say that their financial worries severely or majorly impact their productivity. And so if that's the case, you definitely want somebody on your side or in your camp that can help, relay those fears or allay those fears about, finance or what have you, and to make them a much more productive worker. So, I see it quite a bit, and I think it's really, really important to make sure that your employees are taken care of, whether it's from a financial perspective, and certainly there's a lot of cost that comes to that as well. So that's something that we can talk about in a little bit.
And I'm going to ask you to pick up there. Obviously, folks should consider you an extension of the advisory team. So what else would you, additional insights you might have there, please?
Yeah, I think one other thing that people should be aware of when it comes to working with Edelman Financial Engines is that we are what's called a fiduciary, which means that we pledge to work in your best interests. So we're not trying to sell investment products to you. And what that means is that whether it's a question of, well, should I move all to cash or do something else, or, in these kinds of volatile markets, people are being pitched all sorts of bad investment ideas, frankly. Mm-hmm. And we, as a fiduciary, as an impartial advocate for each employee, can really help separate the good from the bad, and offer behavioral coaching, and not just about the investment strategy, but about all sorts of other financial questions, like Jim said, basically anything with a dollar sign. And that includes things like, well, how much should I be saving? Am I on track to meet my goals, whether it's a retirement goal or some other goal in their life? So there's a lot of those kind of more planning questions that are equally important, or actually more important than the narrow question of what's the investment allocation. The investment allocation is a tool, is one of many tools to get to your financial goals.
Very helpful. Thank you, Wei. Alissa, I'll turn my next question to you. I think, there are a litany of different benefits as we're, discussing particularly financial benefits now. Are you seeing, because our small business viewers represent a number of different size small businesses. Some have, under 10 employees, some have under 50, some have under 100.
Yeah.
Are you seeing that based on the size of the business, they may want to be looking at some benefits in slightly different ways, or a lot of, the messaging today, do you feel like it applies across the board?
It definitely applies across the board. I think it's how they approach it, right? You have to have a plan, and you have to baby step into that based on your size. But I think what Jim and Wei just said is having that connection with somebody like them is important. It's something that we've leaned into a lot as a small business, because we want to be looking out for our employees, right? So I'm just going to take our own experience. For example, we're 10 employees. And we don't have all the luxury of having an amazing, medical plan. So what I want to focus on is the other, right? Which is what we're talking about. We do have a safe harbor, 3% for our employees. We've done a lot of flexibility. We don't have a PTO. It's kind of unlimited. And I'll tell you, time and time again, we actually have to force them into PTO. And the other thing that's really big that I would say what we're seeing from what you referenced, that under 10 up to 100 is LTIP, long-term incentive plans. And having these conversations and thinking futuristically, if not right now, how can we implement an LTIP and a long-term incentive plan for employees? What that's doing is if I'm a candidate coming in and interviewing with you, I'm going, wow, they're really thinking about my future here. And that's what they want to hear. They want to hear that you're thinking about them and you're taking care of them. Because remember, right now, as a small business owner, we're dealing with all of the unknowns of what's going on, but think about what they're thinking about as the employee. And so the more that you're thinking about those other types of benefits, long-term incentive plans, these are cash plans set out that I'm sure Jim and Wei can talk about. When you're thinking about the flexibility around PTO, you're thinking about, even HSA, wellness funds, your culture in itself, like I referenced, off-site team building events. These are all part of your benefits that all sizes should be looking at and considering and planning for if you're not doing it already.
And I want to ask about pet insurance, Alissa. I know that's something you said in the beginning. I have a number of colleagues that own pets, and we know as much as we love them, there are costs associated with making sure they stay healthy and thriving. So but I think folks would be surprised to know the affordability around that if you want to offer that to your employees. So if you could talk there, please.
It's extremely affordable. You can reach out to different groups and you can look at paying for that pet insurance for your employee. It's going to range, but you're talking $13 to $20 an employee per month. Some might be above that. You can pick your plan. But again, you think about I know we have 3 people that on our team alone went out and got pets. All of our employees, every time we talk to them on Zoom during the pandemic, we'd be like, look at my new dog or cat. And so thinking about that and knowing how inexpensive it is, it's an easy add-on. And I can't stress enough, ask your employees, what means more to you? We did a survey internally at our business, and our clients are doing that more and more. What would be something you would get excited about? And you could list out 5 different benefits that don't have a high cost to them.
Thank you, Alissa. Very helpful. And Jim, so we have a number of businesses that have all range of employees. And I think very, very often folks early in their career don't think about retirement, right? Because they're early in their career. And then, of course, on the opposite end of that, we do have employees that are ready to enter that retirement phase. So could you talk to our business audience a bit about how they should think about the retirement plans that they can offer their employees, please?
Yeah, absolutely. I think that's a great question with regard to oftentimes we'll see business owners, they're running their business and it's very hectic and, they're trying to grow their business and they're hiring employees, et cetera. And oftentimes are wearing, 10 different hats, right? So what I do see is that oftentimes is what, they'll suddenly be in their 50s, and maybe they realize that, well, maybe I'm not going to get what I thought I was going to get from my business, or maybe, and they haven't really started their retirement planning. So a lot of times, maybe in their 50s or what have you, they come to us. It's not too late ever, but it is good to start young. But I would say, from a small business perspective, it's important if you're starting a plan, or maybe you even have a plan in place, right? It's important to do your research in order to find the right partner from the start, right? So you need to also realize, what is it that you're trying to offer as a business owner, and what do your employees want, right? And I know we talked a little bit about that before, is really getting to know your employees, right? And what kind of motivates them, and finding that out. So I think that, make sure you have the right people in place that are listening to you with what you're trying to achieve, your goals and objectives. And I can tell you in the retirement plan space, there's many nuances, regulatory rules, regulations that could ultimately, derail your benefit offering, or even disqualify the plan and get you in hot water with the IRS. So the great part is that Wei mentioned that, we act in a fiduciary capacity. So Alissa intent was not to have, the business owner have to worry about offering a retirement plan and all the rules and regulations, right? You can outsource all of that. Actually, as a matter of fact, you can outsource most of your fiduciary duties except for a duty to monitor. So it's important, again, that you have the right partner in place, right? And I think also one of the key advantages of small business, right, I just said before, is, connecting more closely with your employees. And then, thinking creatively about the organization. It can go a long way in providing a great benefits package to your employees as well. And then I would say, look, some of the ways that you could search, whether it's a, registered investment firms that are in your area. You could talk to your peers, maybe that are in your industry as well, and ask them about, what kind of, what do you like about your retirement plan or your benefits package? What is the cost? What don't you like about it? Right? Things like that. So, and I think some of the questions, once you find maybe the right partner, business entity, or what have you, maybe some of the questions you could say is, are you an independent advisor? And how do you get paid? Right? Do you offer education? Will you help my employees? Right? Are you a fiduciary, right? Who's legally bound to act in my and my employees' best interest, right? So these are some of the questions that you might want to ask. Certainly also tax deductions, right? Corporate tax deductions. Yeah. Are we getting the most, right? And work with your CPA and your advisor in coming up what's the best solution for that. So there's a lot of things that you could do, but certainly do your research. Maybe, like I said, do some searches around the area for registered investment advisory firms that are independent. Talk to some of your peers. These are some of the things that I think you can do when how to choose the right types of retirement saving option or benefits package.
Great, thanks, Jim. We had a number of questions just based on your feedback and overview there. Before I get to those, Wei, I'd like to ask, because this will set up the questions that Jim received. Some folks are trying to understand, are we really heading into a recession? And I know that's a difficult challenge for you to answer, but I'm sure you get it all the time. So how would you advise viewers with regards to thinking about, are we heading into a recession?
Yeah, I think it's more than just, are we headed into one, but what should you do about it? So are we headed into one? There's a lot of indicators that people use that tend to indicate the likelihood of a recession, and there's more of them that indicate a recession than there were a year or two ago. So the risk of a recession is certainly material right now. Some people might think it's more likely than not. It's really hard to say with any precision what the likelihood of a recession is, but also how severe and how long lasting it will be is even harder to predict. So I think ultimately it boils down to, what can we control? What we can control is, how prepared are we for a recession that might or might not happen? So, do we, as individual households, do we have the emergency savings to weather a downturn? And as a business owner, are you prepared for that eventuality? So those are the things that we can control. we're not going to know. And in fact, we're not going to know whether we're in a recession often until after we're several months into it. So what matters for your own business is not the national economy, but really your local conditions and your particular business sector matters more than the national economy.
Right.
I mean, they both matter, obviously, but so you're going to have to be responding before anyone declares we are now in a recession, and typically the announcement will be, we've been in a recession since 6 months ago. That's not really helpful in the moment.
And Jim, how do you and the Edelman team, what specific strategies are you advising your clients with regards to the possibility of a pending or a current downturn that we're in? Are there some specific strategies that you would recommend to the audience?
Yeah, I think if you have a retirement plan in place, what I think is always helpful is benchmark your plan, right? It's kind of like identify the costs. What are the investments that are being offered, right? What's the service like? Are your employees' needs being met, right? So those are some of the things that you should probably and you can do that easily. You can benchmark your retirement plan and take a look at what it looks like, comparative to other plans of similar size or similar employee size or or assets or what have you. So those are some of the things that you could do. But I think it's definitely important to every couple of years to certainly look at your provider and are they meeting the needs with how you originally set up the plan, and are they following the investment policy statement, things like that. So that would be probably something that I would recommend to everybody, even all of my clients as well. So
great. Thanks, Jim. Alissa, would like to ask you, we're getting some questions. We're approaching a time for a lot of businesses where the benefits window might be opening, right? Or we're starting a new year. So how should folks be thinking about where we're at in the calendar year with regards to planning for employee benefits?
As far as the company goes, the small businesses?
Yes, like is now a standard window opening where employees can be changing the benefits that they're looking for? And as they start the new year, does the new year allow businesses to adjust some of the offerings that they have for employees?
Yeah, I mean, absolutely. You should, as a business, always be looking at that, even outside of your open enrollment time, I think, because that's, again, forcing you to consider what else should we be doing. And please don't misunderstand me. I am not saying you should be going out and doing everything under the sun. It's more about what aligns with your culture and the kind of people that you're hiring. And also going back to what this is about is retirement, I would say employees want to know that you have a partner and that you also are thinking about that retirement for them. And when can they participate in that, right? So if you've got a plan in place, but really they can't participate for years, what's the point of that? There's a little bit of risk clearly on both sides, but just know that if you have a plan where they can participate, let's say a year in, you should know if that employee is a fit at that point. It's really just, you've got a plan, maybe you have a partner that you've trusted and that you can talk about these plans, the retirement plans ahead of time with these employees, because that's what they get excited about. Again, it's all about their financial future and their time with you as their employer.
And Jim, to follow up on that point, what would be some of the key considerations for businesses when they're looking for a retirement plan partner?
Yeah, I mean, I like I mentioned prior, it would be more about and kind of going off of what Alissa said, right? Is understand what you're trying to achieve, what your goals are, right? Whether it's for your employees and your benefits package, your retirement plan, whatever it is, but make sure you have the right partner in place who's listening to you and who can come back to you, right, with a type of plan that best suits your needs. I mean, that's really what it is make sure that they're experts in this space, as I mentioned prior, right? There's a lot of regulatory and regulations that can really get you in hot water, and that's not what ERISA was meant to be, or offering a retirement plan. But delegate those fiduciary responsibilities, right? You have the ability to do that, and so that's what I would say is make sure you have the right partner in place. They're listening to what you're trying to achieve, and then make sure it's working for your employees as well.
And Alissa, do you have any advice for our audience? Ultimately, as business leaders, we can offer these benefits. We can offer retirement options for our employees, but we can't force them to take advantage of it. So as we're looking to increase engagement amongst our employee base, any tips that you could provide?
Communication. I mean, showcasing the value of that, right? You can't force, anybody to do it, but they have to understand the value. And I think you can share statistics or numbers of maybe others in the organization that are participating, what that's done for them and their financial future. People just sometimes don't understand the true value, right? They aren't given all of that information. And so we can't assume they do and just kind of brush it under the rug. So the more that you can talk about it, and again, we can't forget a lot of people are visual learners. So having graphs or diagrams that showcase what that could look like for them over the next several years is really important.
And we also, we know as small business owners, you wear many hats. You're the CEO, you're the salesperson, you're the accountant. So time is the most precious asset that our small business leaders have. So what is the time commitment, Jim? I'll start with you, and then Wei would like you to add context as well too. But what is the time commitment for a small business thinking about opening up a retirement plan for the first time?
Yeah, I would say, the time really depends upon the owner as well. I mean, what we try to do is not have them involved as much as possible, but there's certain things that they do need to be involved with. For example, the plan design. What is the plan going to look like? We'll come with ideas, but I would say, and then if they agree with it, right? It's kind of getting the plan document set up. I would say, typically if you're starting, you can do one in 30 days or something to that is probably the typical time frame. But if you're trying to do this at the end of the year for the beginning of the next year, it usually takes a little bit longer. And the reason being is that oftentimes there's a lot going on at the end of the year. You have testing going on. You have so a lot of the entities that are involved in setting up what needs to happen. There's a big backlog. So at the end of the year, it's kind of difficult to get that started first thing, but I would say that the typical is about 30 days and really, 30 minutes of the employer's time in making sure that plan is set up and kind of getting that together. So that's the typical time frame.
Helpful. Wei, is there anything else you'd like to add there, just based on your tenure and experience?
Yeah, not on that particular thing, but just a quick thought on the earlier question about how do we encourage participation. Yeah. Just a quick thought to add on to Alissa's great thoughts there. One thing that a lot of people aren't aware of is that starting to save early is very impactful relative to waiting until you're in your 30s or 40s. So, and this is sort of the magic of compound interest or compound growth, that if you start in your 20s, you might end up having to save only a fraction of what you would have to save if you start in your 40s. So, that's something that's often forgotten. People don't think it's urgent, but just starting out with, you don't have to save $10,000 a year in your 20s, but just start and that, a couple of $1,000s each year will grow over time with the kind of rates of return that we tend to see with diversified allocations. So really try to emphasize the power of starting early.
Great. Thank you for that, Wei. So obviously we're living in a time now of flexibility, hybrid work. It feels like it's going to be much more of the norm as we continue to move forward. Alissa, what advice would you have for our business leaders as they think about offering the right level of flexibility, but also know that there is going to be requirements to be on site to make the biggest impact for the job? So help us navigate the hybrid flexibility world when it comes to benefits for our employees, please.
Yeah, I'm sure the hairs on the back of your neck are standing up with this question because it's a hot topic and it's the number one question we get. And it has continued to be the number one. And we talk to thousands of people every single year. So just keep that in mind. And I'll give you a crazy statistic. By not being open to it, you are going to lose somewhere between 70 and 90% of the available talent for that position. Now, it varies based on role. We're not talking about manufacturing floor positions, but you are 70 to 90%, your talent pool is going to shrink by. And so get rid of the word hybrid in your head. That's become, I think, like a negative word. Think about how can we be flexible with our particular business and really do some brainstorming sessions around that, because it also comes down to trust, and that's to your culture. And so if you can somehow come up with a plan where you can talk about flexibility, you are going to keep more engagement with people who are looking to come into the business. And I will tell you, you are going to lower your risk of losing people, because you got to think about your competitors, and it doesn't matter the client size. If there was a staggering statistic that came out today that we increased the work from home 50% from last year. And so this isn't going to go away. It's not going to disappear. It's going to get better. I am optimistic about that, but you have to be open to talking about it.
And Jim, have you seen any new behaviors when it comes to retirement? And now that we have more flexibility to work from home, are people postponing retirement to longer? Is it shorter? Or how have behaviors changed, just so our business leaders can think about how their employees might be thinking about retirement in this flexible work environment?
Yeah, I think you saw a lot of folks, certainly during the pandemic, a lot of folks retiring, and now I think you see a lot of them with the economy the way it's been, is that a lot of them are starting to re-enter the workforce again, and maybe they weren't as prepared as they were. So that's why I said, before you kind of hit that button or what have you, it's really important to make sure that you have somebody in your camp that can help you out and help you with those decisions and make sure you're on the right path and make sure that you're not going to outlive your money or, things like that. So it is really, really important to make sure that you have somebody that understands, what you're trying to achieve. And, but I haven't really seen, anything in terms of a pattern, other than during the pandemic, but, I think it's certainly, when people feel it's time or maybe they're burnt out, that they'll start to look at those decisions. But I would make sure that you have somebody on that's a partner that's there with you and you're making the right decision.
And Wei, do you think flexibility impacts folks' investment behaviors or their process as they think about investing? Like, does it give them more time to potentially overanalyze and, as you said earlier, leave emotions out of it?
Yeah, so I do think that the people who had a lot more time to be on the internet, and you certainly saw this with the Reddit, GameStop kind of phenomenon, with Robinhood trading. That they tend to be younger people, spend a lot more time trading in stocks to their detriment. There's a few kind of stories about people who struck it rich, but for the most part, people have not benefited from doing that themselves. So I think as the economy normalizes, the Great Resignation is over. We're not seeing those kinds of departures that we saw during the pandemic. And employment rates are very high now. And as Jim said, I think people who did retire are rethinking what they want to do. They tried living in a rural location, and many of them decided they didn't like that as much. And so that the social engagement that comes from working is something that people are rediscovering, and that plays a role into the whole hybrid versus back in the office or remote kind of decisions that Alissa mentioned. So we've gone through a big reset in the economy, but there are some fundamental needs there that a lot of people need to work in order to put away enough savings for the retirements that they want. We didn't solve the retirement crisis all of a sudden. So most people still need to work, and ultimately individuals need to get help to figure out what's feasible for them. Can they retire 1 or 2 years earlier? That's a very individualized question. There's not a playbook that's right for everyone there.
Got it. And Jim, last question before we just do a quick rapid fire for the panelists. But Jim, we have some audience members asking, just like, where do they start? Just give me the basics. I'd like to start. I'm interested in offering a retirement plan, but I just really don't know where to start.
Yeah, if you're an organization or a company that's looking to start again, there's so many different types of plans out there. You have SEP IRAs, you have simple IRAs, you have defined benefit plans, defined contribution plans, profit sharing plans, cash balance pension plan. It goes on and on. Deferred compensation plans, right? So again, I think where you start is, what is it that, look at yourself. If it's your company and you have employees, what is it that you're trying to achieve? What do the employees want, right? And then make sure you do that search, kind of like what I talked about, is talk to your peers. What have they done, right? And maybe you do some searching, but as long as you have like a framework in place, and you know what you're trying to achieve, then it's a lot easier to connect with somebody, a partner or somebody like that, to kind of guide you through that. So that's what I would suggest is what is it that you're trying to achieve first, right? What are your goals?
Great, Jim. Thank you so much for that. So I'm going to ask each of you the same question as we wrap up here. I just would love for you to give the audience one last piece of advice as we continue in these uncertain economic times. We're starting the new year. So Alissa, if I could please start with you, what would be the one last overarching piece of advice you'd like to give the audience?
Yeah, I think number one, you have to stay optimistic. We've got to do everything we can as business owners to look at the positive, to be very open to talking and communicating with your employees and asking questions. Because again, we might assume something's important to them, but it isn't. And so the more info we can get from them, the better. And again, that just helps with hiring and retention. And I would say, as a lot of us might be going into review season right now with our employees, one of the things we're going to be doing that a lot of our clients have been doing that's been wildly successful is asking them about what do you have for a personal goal? We're not talking company, because you're already covering that. What's a personal goal of yours? And maybe one of the things you can do is help them reach the personal goal as well. Because again, a healthy employee at work and at home, you're far more productive. So just baby step into it, and a lot of communication.
Great. And Wei, what would be your one last piece of advice, please?
Yeah, I think you'll be tempted by all the news and all the opinions out there in the coming months and years ahead. And I think if you're tempted to sell out of some investment or concentrate in some specific sector, just take a moment or take a few moments and be humble and say, why do I know better than all the other people in the market what to do? Because the market is not just a passive thing. It's made up of buyers and sellers making these decisions, and they're using all the same information that you have, probably more information actually. So ask yourself, why do you think you can outguess the markets before you act on something?
I love that. That's a reminder that I will definitely take to heart. And Jim, your last sign off, please, in terms of advice.
Yeah, I would say it's communications is key, and also make sure you have the proper framework in mind with what you're trying to achieve, and then kind of it really dovetails from there. So, but it's definitely the communications and understanding what's working, what's not working, and then again, remain optimistic. So we've been here before. we come out of these, and so continue and continuing to improve and see if you can improve on the efficiencies of the organization and things like that. So that would be my one closing remark.
Well, thank you very much to our three panelists. This was a really, really insightful conversation, just like I expected. Thank you so much to Edelman Financial Engines. And thank you all to the small businesses, our audience that work so hard every day to help our business community continue to thrive and grow and innovate. You truly are the backbone of the economy. We hope you all have a great rest of the day and a holiday season. If you have any more questions, please visit the Edelman website or the U.S. Chamber of Commerce website. Thank you again so much for joining, and have a great day.